Hello. Mic test. So guys, I'm just loading up the screens and everything. And in the meantime, if you guys are online, I would appreciate if you can confirm about the audio and the visuals. There should be a chart of, let me load up crude here. So there should be a chart of CL over here, CL1 futures. Anybody on YouTube or TradingView, if they can confirm that everything is looking good, then we can then start off, or I'll just wait a few more seconds. So I have the comments opened up on YouTube, and let me load up a few more things. Okay, so more or less I am all set here, right? Let me recheck the audios. I can see a couple of people are online here on YouTube at least. So I hope you guys are doing good, and I would appreciate if there is a little bit more participation from your end, right? So without any further ado, let's start off with the legal disclaimer here on screen, suggesting that all content presented here is for purely educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for trading, investing, or any other reason, then you yourselves will be liable for your loss, profit, and loss of profit, etc., etc. With that out of the way, let me give you a quick introduction. My name is Nirav Yadav, and I'm the admin and owner of 50eyes.com website. This is a website where I present my views related to major markets, including Forex, crypto, stocks, indexes, commodities. Been doing it for 8 years, right? And I'm also the founder of this YouTube channel called 50 Eyes Market Analysis. This broadcast is going live on both 50 Eyes Market Analysis YouTube channel as well as the TradingView. TradingView handle is my name, Nirav Yadav. So these are the ways where you can watch my content, and I'm also the author of Think with the Markets, which is a book based on my methodology or the way I use Elliott Wave analysis, right? So that is about the work I have done so far in the field of Elliott Wave. And one of the many, or one of the not many, one of the more important or more notable things about my work is my forecast accuracy, which is a record of all the analyses that I have done over the years. I have kept a spreadsheet of all of them. For 2016, we had a outstanding accuracy of 83%. For 2017, 87.5. 2018, 84.61. 2019, 84.88. 2020, 88.52. 2021 is 82.22. So the way these analysis accuracy is calculated is we first state out the instrument we were discussing in the analysis, that price, the analysis of the instrument, the link for the video of that instrument, and what happened, with additional remarks. So you can just navigate through these sheets. You can actually check these links. All the webinars done in the last years, 2021, etc., are all documented here. So as you can see, 37 out of 45 analysis played out as expected in 2021. So 2022 is not yet compiled. The reason for showing this is that this is the highest in the industry that I have seen over the years. Nobody has a well-documented record of 6+ years, soon to be 7, by the way, with the accuracy as high as 80+ for all those years and ranging to as high as almost 90. So these are some of the major highlights of my work, right? Now let's have a quick overview of how these webinars proceed. In the webinars, we discuss the charts of Euro USD, EURCAD, USDJPY, EURJPY, crude, gold, S&P, Nifty, and then BTC. Right? We discuss all of these charts based on Elliott Wave and advanced price action concepts, which is my area of expertise. After the discussions are over, I will look over in the comment section. If there are doubts, you can post them. If there are none, we will move on to the next chart. With that out of the way, let me now head over to the actual charts and just give me a few moments while I load the exact chart we want to start our discussions with. Any participation from you guys in the comment sections would be appreciated. Just wanted to give you a quick heads up so that there is more interaction here. After all, we are doing webinars and not a recording. Let me see which chart. There it is. So now let's start off with our first chart, which will be the chart of Euro USD. In this chart of Euro USD, last time, as you guys recall, when we were doing the webinar live on Wednesday, we were of the view that longs should be initiated, and I actually went ahead and added longs in live market. That was on 7th December 2022, by the way. Right. So after that, I had to exit those longs because although the market did move up as we were expecting, but the movement has not been that strong. So I'm just going to discuss my bias of getting out of the positions at that point in time and what I think of this market right now and what is the trading strategy right now. So I will not go ahead and discuss the whole count from the longer time frame. We are just going to go with the 1 hour view. Reason is that the longer time frame count I have discussed multiple times in my past webinars. You can just watch any of the past webinars, number 9, 8, 7, 6. We have discussed it. So in this webinar, let's just focus on the count we have at hand right now. So in this particular count, what we have over here is that from this point of reference, we have a wave Y which is completing over here, right? And then the analysis becomes that the X is complete or it's still continuing. So as per my understanding, both things are possible, right? So if we consider the scenario that X is complete, let's say here, then we have waves lag or not wave but a lag up for Z remaining because this will be the whole wave. If we consider the fact that X is still continuing, we still have the lag up remaining. So the whole directional view remains the same. The directional view for both of these analysis suggesting that we have one more up leg remaining on this counter of Euro USD. Now some other interesting facts which you can note. First of all, the direction is up. So we'll just note it over here. Second thing that I have noted over here is that it is possible that the X may have completed here. If the X is complete here, then we may have a zigzag heading in the upward direction. If the zigzag is heading in the upward direction, then there should not be a takeout of this low, right? So if the market goes straight up from here, from the current price action, then that would mean that the wave Z is what we are progressing as and that the wave Z is complete, right? 1 second. Secondary analysis would be that the market goes on and breaks this level. If the market breaks this low of wave B or the currently marked wave B, then we will have to assume that the market is progressing as a possible sideways kind of a movement. Let the wave X is still continuing. In which case we can go with the multiple analogies, but long story short, in that case, the market can remain sideways or sidebound within the price range of 1.059 to 1.02249, right? So these are the two analogies. So the trading, or what do you call the conclusion of this analysis is that we should, in fact, wait for this market to take out this high, right? But that does not give us a very good trade. So what I plan to do is add partial shorts here, right? And if the market continues sideways or within this range, then I'll add more shorts near the middle of the range or based on the price action at that point in time. So adding partial longs here, let's say if you are going to go in with the 5 lots, then you can add 1 lot or 2 lot here, right? Leave the remaining 3 to 4 lots for further price action within the range. If the market goes straight up, you will be going up with 1 lot, and if it goes sideways, then you have the option to add more. That would be all for my quick outlook on this chart, right? So if there are any doubts, I'll just wait a few seconds while I prepare the next chart. It will be EURCAD. Any participation or anyone online, if they are online and clear on what we are discussing, should type in just understood or clear in the comment section. And okay, so let's move ahead with the next chart. Next chart will be the chart of EURCAD. So in the chart of EURCAD, last time when we discussed, we had a corrective structure going in this chart. This was the chart, I believe. Yeah, this was the chart we were following. So let me go to the 1 hour time frame, and what we have over here is what we have over here is updated count is we are expecting a possible correction in this market heading in the upward direction. And the main conclusion of the whole analysis was that unless we see a break of this green channel line, we are not interested in any shorting, right? So just not entering into too much detail, because again I had discussed this one in the last webinar as well. You can check number 9, trading opportunities webinar number 9, both on YouTube as well as TradingView. So the current outlook still remains the same. We have no break of the channel, right? Price action is still almost in the middle of this channel, middle of the range. So the analysis comes out that we still wait and watch, alert placed on the channel. As soon as the price action exits this channel, we should be seeing an alert, and based on that, we will look for possible sell-offs in this market. Nothing really to add here. Just wait for channel break for sell-offs. Let's move ahead with the next chart. USD Japanese yen, USDJPY, JPY. Let me quickly load that up on the chart. Okay, USDJPY 15 minutes chart. Let's see what's happening here. So as we discussed in the last webinar, USDJPY was in an uptrend, right? But there was a correction in play after this diagonal, right? Now, for those of you who are watching and are not familiar with the diagonal pattern in Elliott wave, a diagonal is a pattern which has 3 waves in the upward direction. Let me just simplify it. A diagonal is a pattern which looks like this. So basically, this is what a diagonal pattern is, right? So the underlying features or the distinctive features of this pattern is that all these legs are in threes, and the most important feature is that the leg number 4 and leg number 5 overlap each other. So let's have a quick look at what that actually means. If you see, this leg number 4 and 1 have an overlap in price. Similarly, if you see on the actual price chart, leg number 1 and leg number 4 have an overlap, right? With that, and the remaining patterns being in 3 is like all these waves have one wave up, second down, and third up. Again, one up, down, and then up, down, and then up. So with all these factors combined, we conclude that this particular pattern is a diagonal pattern, right? Right. So with that in mind, we concluded in the last webinar that this market will see some sell-off before we look for any longs in this market, right? So as such, the sell-off has already happened. The general target zone will be the zone of this 50-60 retracement, 50-61.8 to be precise, which is coming around 135.739 and 135.225. In this particular case, we see that the market has already touched this level, but it has not really gone inside this price zone. Generally, we want to see it going inside, but there is no such rule suggesting that it should go inside. So based on all of that, I will still not add any longs because it still can go and continue with the correction. I can obviously count this correction, right? And I probably will afterwards, but there is not much point because, as I said, I'm not interested in longs currently on this market. What I'm actually going to do is I'm going to push an alert over a important region, which I think if the market takes out will become an interesting thing to observe. And after that region, we should possibly look for longs. So I'm particularly be interested in longs above 137 levels on this market, right? So I have placed an alert over there. In the meanwhile, if the market does go within the 50-60 region, then I will also like to remain aware of that. So near the 61.8 or the lower end of this box, I have again placed an alert. So the strategy will be swing wise. We can wait for the market to give more correction, add near the lower range of this box, right? Add partial positions, partial longs basically. And once the market takes out 137, we can then add more longs. That is what I am hoping for. If I can get the entry there, then I will be looking to play it like this. Secondly, what we can do is we can just wait for this long to be taken out, reanalyze the market as per the price action at that point in time. So these will be the two quick outlooks we have on USDJPY trading strategy. I will be looking for longs, right? That's my trading strategy. I just discussed the entries and the whole systematic way of adding and exiting in this market. So heading in the comment section, I have a comment from Farid Togi saying clear. Thank you, Farid, for the confirmation here. And obviously keep participating if you have any doubts. I'll wait for your comments for USDJPY. Otherwise, please type in understood or a confirmation message basically. With that out of the way, USDJPY is now considered complete. Next chart will be the chart of EURJPY. So EURJPY, let me see. Yeah, there it is, EURJPY. So when we were discussing EURJPY last time, I very clearly mentioned that, not mentioned, I actually executed a trade on this counter, right? So let's see what was the analysis, what is the analysis, and how things are playing out on this one. So first of all, EURJPY again is in a suggestively strong or basically an upside movement, right? Our point of reference is the price level around 140.755, date around 2nd December 2022, and this seems to be forming an impulse in the upward direction. With that analogy in mind, we after this impulse are seeing a corrective formation. The corrective formation looks like a possible flat. It could be some other things as well, right? So if it's a possible flat, then this is what we are taking this as the A, which we are taking this as the B, and the C leg seems to be in progression right now, possibly a diagonal formation, right? So now that I have done all the counts on the screen, let me just quickly explain this part after this circular thing that I do. So from this point of interest or reference, what we have here is a leg down for a leg up for a B, and then a leg down for a C. This kind of a pattern is called a diagonal pattern. The C, the whole pattern, the ABC is called a flat, right? Down, then up, and then down is called a flat. And the C leg in particular is called a diagonal. And we just discussed the diagonal a while back. Basically, the diagonal will have the characteristic trait where there is an overlap between 1, 2, 3, 4, 5. Yeah, so that's as good as I can draw it as fast as possible. So that's what a possible diagonal will look like. 1 down, 2 up, 3 down, 4 up, and 5 down. overlap between waves 1 and 4, right? And hope that much is clear. I'm not drawing it very precisely. So this is what a rough diagonal structure should look like. Right here we have the 1 over here, the 2 over here, the in the colors so that things make more sense. So 1 over here, 2 over here, 3 over here, and fourth has, as you can see, gone over in the price territory of wave 1. So that's where my assumption for diagonals come into play. And then after, I'm expecting a leg down for the fifth wave. So that's an interesting chart. You should keep it in your track list, as it can lead to some very interesting trades, right? So now let's discuss what trades can be found on this chart in the coming sessions possibly. First of all, as I said, it's a diagonal. That means the fifth leg down is still remaining, because after the 4 is complete, there's a leg down here, right? After the 4 is complete, there should be a leg down here, right? So if this count is correct and if our analysis is correct, then there should be a leg down, right? So very aggressive intraday traders can look to trade sell or trade short on this market with the minimum target below wave 3 low. However, a more conservative and a proper approach, considering the direction of this market, which is overall up, right? Considering that we should be looking for longs rather than shorts. So a better strategy would be to wait for this market to take out the wave 3 low and then take out this trend line. Once that happens, we can enter longs with this last low as our stop loss. So that's it for this market. Intraday short-term aggressive traders who know what they are doing can look for shorts, but swing perspective, we wait for the downside to complete, wait for this break of the trend line, and then possible longs can be executed with stop loss below swing low. EURJPY, I don't think there's anything to add here, right? Let me check what next chart will be. Next chart will be of crude oil. I'll wait for a few seconds in the comment section, and Mr. Darwais, hi man, MF Darwais, right? I remember you were in one of the last 2-3 webinars. Nice to see you back again here. And Freddie Mite, what time frame do you use? I use multiple time frames depending on which time frame the pattern is clear or unclear. So currently, as you can see, we are on 15 minutes. If you are not sure what I'm using, just check on the top left corner. This is the time frame over here. So the one which is bluish is the one we are in play, right? And if you check out my past webinars, like webinar number 987, this is 10th webinar, by the way, in the series of these weekly webinars I do. So then you can also find my overall or longer time frame view of these charts. More or less, many webinars have overall views. In this particular webinar, I'm not seeing that much of a participation, so that also reduces my interest in going into much detail. So Farid, Freddie, I think that answers your question. Farid, if you are still with us, again, more interaction. And what about you, MF Darwais? Were you following me on this EURJPY discussion? If yes, are you clear? And hi, Mark Hamster. So guys, I'll just wait for a few more seconds before I load up the chart of crude oil. There it is, CL1 futures. WTI West Texas crude. Okay, so crude oil, we have the chart over here on screen, and crude oil, we have a very clear analysis, which is sort of playing out as we discussed in the last discussion, which was Wednesday. The date was 7th December. So let me reiterate what we were saying and what's happening. So what you can see over here is that we are on the 1H time frame, as you can see on the top, right? Currently, we are progressing in a triple zigzag kind of correction here. The wave Y is our point of reference, right? First timer Mark. Okay, Mark, you can ask me whatever doubts you have. And I also go into the basics. So you just follow along whatever I'm saying, you will understand. Just got here, continue. Okay. So what we have over here is we have a wave Y, right? After that will come a wave X, and then where we will be or should be seeing a wave Z. So when I discussed last time, you know what, let me just quickly go over the whole count. Otherwise it may get confusing for first timers here. Okay, so see, the pattern we are following over here on the crude oil chart is from the price level of 131.161, and the pattern basically is a what we call a triple zigzag. You will see a lot of triple zigzags when I'm doing these webinars, because Forex pairs by their very nature are complex and form a lot of these crap looking sideways overlapping patterns, right? So if you follow along on this orange rough drawing which I have drawn, you can see three legs, right? One down, second up, and then another down. This is what you will call a wave W, right? Then you will see a wave again down, and then another up and another down. This is what you call a wave Y. And then the last one, you will again see three legs. You will see down, up, and then down. This is what you call a wave Z. So between these W, Y, and Z, everything is called a connecting wave, and connecting waves are labeled X. X. So basically, this is your connecting wave here, and this is your connecting wave here. So now let's just remove this clutter. So basically, here what we have on the actual chart, the W is over here. Right? The X is marked over here, and the Y I have marked over here. Simple enough, I believe. Now the next connecting wave X was the one which was causing us the whole trouble. The whole analysis, if you follow me from the last 2-3 webinars, by the way, it becomes interesting if you go over there, because you can see the analysis was very clear, but only if you were able to take swing trades could you take this opportunity. Intraday trades were not giving us very good opportunities on this counter. So anywho's, the analysis, if you see any of the past webinars, you will realize that we have always been puzzled by the fact that is the X complete here? Is the X continuing? Is it complete here? The position of X was a big unknown, right? But overall, my downside target was 70 on this chart. So I'll just mark that. Somewhere here was my downside target. So in the last webinar, when I did the webinar, the market was trading, let's see the exact or 7th December. Let's see the price around 7th December when we did the last webinar. 7th December. So yeah, so the market was trading somewhere here. And my analysis was that it is going to go down. There is no doubt about it. And it should touch 70 levels if this analysis is correct, right? However, the problem we had was we were not still clear that if the X is complete already, like here or here somewhere, or is it still continuing sideways, right? So based on that, the analysis was that you can enter shorts. Target will be this much, but the stop loss will be this much, right? So the risk to reward was really screwed here. You may make $1 by risking $4 or $5, something like that was the risk to reward. So I was not interested in taking any shorts on this counter, right? And after that, as you can see, the analysis plays out pretty much. It has gone down. It is almost near. It is almost trying to approach 70-ish levels. Currently, it is around 72.113, right? And still, the same thing holds. We still are not clear if the X is complete. But based on this strong downward movement, it may have completed. Again, I have no confirmation whatsoever on this counter. And this is crude oil, so it's not like a stock market index where I can pick up the top 4 or 5 stocks and try to determine what do you call the direction from that. So nothing like that cross analysis I can do over here. So I'll have to come back and conclude that it is still having the downward direction, and we still don't have a proper confirmation if it will go down straight or it will go up and then down. So by the way, if you are option players, if you understand how option contracts are traded, you can take advantage of it. You can create some spreads on the call side. If you know what option contracts are, you will know what I'm talking about. So that's about it for crude oil. We still expect the market to touch 70-ish levels. We do not have confirmation if the market will go straight down or it will go it will take a little bit of move to the upside and then down. So that's my take on crude oil. If you guys any doubts, you can just type them in the comment section. Please let me know also if I'm going too fast. Next chart will be the chart of gold. Farid, Mark, Hamster, Darwals, you guys still with us? Okay. So now let's move ahead to chart of gold. What chart I'm following? Yep, taking it all in. Thank you for the feedback. Yeah, guys, before we move on to the chart of gold, if you are on TradingView, hit the rocket button so that the TradingView people know later on that this webinar was useful and more people can join in, right? And if you guys are on YouTube, hit the good old like button. Again, we need to reach these algorithms and tell them that our content is useful. Otherwise, it becomes a thing of the past very fast. Which one am I using? Let me go on our. Okay, so there it is, the chart of gold, and we are on. Let me just quickly check a higher time frame for a sec. Yeah, there it is. This is the chart we are using on gold. Okay, thank you for hitting that rocket thing. Okay, in this chart of gold, our analysis starts from a lower time frame. Let me just quickly go over there. Okay, so this is the point of start of our analysis. Actually, we discuss the whole thing, but yeah, it's not required here. So I'll just start with the last point of reference. Point of reference is basically the point from which the analysis is started, right? From this point of reference around the price of 1617. Date is around 3rd of November 2022. We have a analysis which suggests that we have an upside movement in this market, right? This upside movement, I have considered this as a wave 1 and this as a possible wave to complete, expecting a wave 3 up. Now I'm going to discuss what all these 1, 2s and 3s are for those of you who are not much familiar with these Elliott wave counts. So first of all, in Elliott wave terminologies, a trend will generally have an impulse or a diagonal. An impulse is consisting of 5 waves. Those 5 waves will look like this: 1 up, 2 down, 3 up, 4 down, and 5 up. So the first is labeled 1, second is labeled 2, third is labeled 3, 4, and 5. So 1, 3, and 5 are in the direction of the trend, up, up, and up. And 2 and 4 are against the direction of the trend, down and then down. Right? So in this particular case, we have the 1 complete here. We will discuss the 2 in a little bit of detail just now. And we expect that if this count is correct, we will see a 3 up. That is our expectancy. That's our first hypothesis or first point of view, right? So keep in mind that an analysis means you are going to discuss multiple different hypotheses. Multiple different hypotheses is basically the fact that the market can take multiple different paths. Okay, there is no such thing as one path and one analysis and one outcome. That's just stupid, right? So once you have done the multiple different analyses on your charts, and if there is a conclusion among these analyses, then you take on the trade. That's the general way to do it. I have discussed it in much more detail in my book, which is available on Kindle as an ebook, Think with the Markets. But again, I'm going to discuss that concept here as well, so just pay attention. So our hyper one is suggesting that we are looking to see an upward movement for wave 3. That's our current hypothesis, right? Now, as I just discussed, 1 is up, 2 is down, and then 3 up, right? So in this particular case, this 2 is looking like a flat correction, specifically a running flat. A running flat pattern basically looks something like this. From the wave 1, there are 3 legs down and then 3 legs up. The upward movement takes out the last high, right? So the upward movement takes out the last high, which you can see over here very clearly, and then it gets back into the price again, back into the last high level, below the last high level again. So it is fitting all those characteristic traits. Based on that, I'm calling this running flat, and I'm expecting that the wave 2 may have completed here, right? So if the 2 is already complete here, then that gives clearance for wave 3 up, right? So if there is clearance for wave 3 up, then the strategy becomes the best strategy with the conservative approach will be to take longs on the break of the last high, right? So that means take longs on the break of 17.9, sorry, take longs on the break of 1809, right? The reason why I said the break of the last high is that it is possible that 2 may have followed some another configuration, right? So that's why I'm saying break of the last high. There are like some other complications which I cannot discuss in these short webinars. So the conservative setup is what I feel like is the better setup here. First, which is break of the last high. We look for longs, crude oil. I'm saying crude oil, gold. Sorry about that. Second hypothesis will be we will have to go a little bit into the background of this market to discuss what the second hypothesis is. Right. Second hypothesis is a little bit different. Remember in the last one, we were taking this as our point of reference. And we were saying that we are expecting a 1 year, a 2 year, and 3 year. So it was a long setup. Second hypothesis, we use the actual point of reference, which is the very back of the chart around 1614 price level, date 28 September. And we realize the fact that it is also possible that this market has just gone up for a wave A, gone down for a B, and this is a diagonal, right? Now keep in mind, A up, B down, and C up is called a zigzag pattern. It looks something like this. By the way, in this case, it's not a zigzag. In this case, it's a flat pattern. Sorry about that. So A up, B down, and C up in this case is a flat pattern which looks like this on the actual chart, not actual rough chart. So this is the rough iteration. First leg is called an A, second leg down generally touches the low or the starting point of A is called a B, and the next leg up is called a C, right? And in this particular case, the C looks to be progressing as a possible diagonal formation. That basically means that once this high has been taken out, then this market can see reversal, right? So once this high is taken out, this market can see reversal, and the confirmation generally is taken at the break of the trend line. So below this trend line's break, there will be a possible sell setup. Now it is interesting to note here that our past setup or hypo 1 setup was long or upside, specifically above the last high, and our hypo 2 setup is suggesting possible shorts after the break of the last high, right? So basically what this means is that longs are going to happen. The market generally does not reverse right after the break of the high, even if it's a diagonal. So the market will give some upside movement generally till the trend line, or it will try to go near the trend line. So long story short, we will or should see some intraday longs on gold. Those intraday longs will have to be executed very fast. Basically, they should be limit orders placed beforehand in the market, right? And the upside will be or can be limited. In case of hyper 2, the upside can be very small, like only, how much is that? Like only 1808 to 1808, 1810 to 1818 something, 7-8 points. In the case of hyper 2, it can be 7 to 8 points at max. In the case of hyper 1, because it's a wave 3, it can just fly high and it can cross 1850, 1860. I mean, basically, there is no need for targets. It will go much higher, right? So keep that in mind. We have both setups. Both setups are pointing to the upside. One is pointing short-term buys. One is pointing long-term buys, right? So we have a confluence of analysis, right? As you remember, previously I was talking about why we need multiple analysis. Now you understand if we have two analyses and both are pointing towards a confluence, then we can have a possible trade. Hyper 2 is suggesting down, but after a small up move. We have a small confluence of upside. So that's my take on gold, quite a detailed analysis. I hope you were able to catch all of this. If there is any doubt, I'll wait for a few moments in the comment section. I hope I'm not going too fast. Mark, were you able to catch it? What about you, Darwas? And where is it? Freddy, Farid, unknown. Were you able to catch all of it? If there's any doubt, okay, Mark is saying clear. Good. So next chart will be the chart of S&P's 500. Let me see SPX. Yeah, good stuff. Thank you, Mark. Do make sure to share this content after this webinar is over. Right, we need as much visibility as possible. Also, the Monday, Wednesday webinars are not seeing any participation. As a matter of fact, the Wednesday webinar didn't even have one comment when I was live. So I might have to reduce my frequency because of the participation generally seen only on Fridays. So anywho's, let's head over to the next chart. Next chart is S&P's 500. Let me just quickly load that up. Okay, so in the chart of S&P's 500, as you can see on screen, last time we were discussing that there was a possible diagonal formation. Not a big fan of this count. I think we will have to completely relegate this at some point. But so far it is holding. And the long story short of this count was that we did not have any confirmation either on the upside or on the downside. The reasons were, I actually explained them in quite some detail in the last webinar. So I'll just leave the reasons. They are not really, they are relevant still, but it's not like they are giving us any trade setup still. So I personally do not think there is a good long setup here, right? I might become interested in selling this market if it crosses below this level. What is this? 39.14 for some minor targets like 38.70 to 38.31. And the analysis which is happening right now, as per my understanding in this, that maybe we have an ABC up here, right? And if we take the diagonal formation, we have the ABC up like this. But the whole thing is that we have a zigzag pattern which looks like A up, B down, and C up. The real reason for me holding back is that I don't see a proper C wave formation here, right? So, okay, 1 second. There's one more point which I missed. Do we remove the diagonal formation completely? There is a count which is suggesting that this could be like this. There's a counter count which is suggesting that we have the A up complete, B up, B down complete, and C up complete. So this is less likely. So yeah, I just checked the two major counts. One we have already discussed in the last webinar. It is still unconclusive. There is a little bit of a what do you call possible bias which was forming to the upside, but after checking both the counts, I don't think we can hold any bias right now. So I will hold any trades on this market. The counts you can see already on the chart. We are expecting this to be the A complete, this to be the B complete, and this to be the C complete. Secondly, as I just pointed out, the WXY. So both upside and downside are equally possible. So I'll just hold off taking any trades. Only thing which we can say with some certainty is that if this market goes above 40.74, then yes, we can hold some stops below the last low. If let's say the market flies right away from here, and then we can look for market to take out the last high and maybe go a little bit higher, at least higher by what is this level, 70 to 80 points at least, based on the price action of the last congestion, this zone. So I will hold off on giving any further analysis on S&P for now. As I said, it's a little bit unconclusive for me. And the only possible okayish looking setup is longs above near the last level of 4073 on the data feed of FX. Always keep in mind different CFD brokers will have a little bit of different variations in price. I don't think there is any doubt because we never really concluded the whole analysis properly. So if you have any doubts still, you can post them in the comment section. Next chart will be Nifty, and then we will follow Bitcoin or BDC very quickly. For waiting for 5, Freddy, I have counted the whole thing from the start on the 4-hour chart, by the way. I'm not discussing it because I've discussed it way too many times. The whole pattern being a diagonal here, and this being a A, and this being a B, and then there's going to be a B possible complete, B continuation as a triangle, and then C down. You can follow the whole story. I've done this way too many times. Just check webinar number 7 or 8. You will see me discussing the whole count. So I'm leaving it there, not discussing it any further. Let's move ahead to the chart of Nifty before we move ahead to BTC. Nifty, where is that? Let me just quickly load that. By the way, guys, before we move ahead, I would like to request again, if you have joined in later or if you are watching it as a recording after this actual webinar is over, make sure you hit the like button on YouTube, rocket button on TradingView, and you share the content with at least 2-3 of your contacts who are into trading or on your social media platforms, Twitter, Facebook, LinkedIn, whatever you use, right? And these webinars are conducted, by the way, if you have not already, if you don't already have the knowledge, these are conducted every week on Monday, Wednesday, and Friday, same time, which is 2 p.m. GMT, right? Just convert it based on your time zone. 2 p.m. GMT every these days, Monday, Wednesday, and Friday. These webinars are conducted. Same markets are discussed. Live trades are also discussed. So let's head over to the chart of Nifty 50 here. So last time when we discussed, my view was that this market looked very bearish to me, right? And then there was some fundamental news events which were happening here. Let's see all of them considered together, what's going on here. First of all, I personally have the opinion that this market is in a wave A down and then this is a wave B up. That was my count last time and I was expecting it will go down for C, right? But because of the news events that were coming into play, the market continued the wave B pattern, right? And later on went down. So see, the fun fact is the market could never broke higher than the important or the most recent higher level, right? But it also did not fall because of the news event yesterday. Only today could it start the fall. And now that it has fallen, it has completed the minimum basic requirement. First of all, it has touched the 18,400-ish level. Not precisely, but it has gone very near to it. So we can consider that 18,400 has been achieved, right? Secondly, the pattern seems to have completed itself, as you may have seen me pointing it out so many times. A down, B up, and C down is called a zigzag pattern. So we have the A down here, the B up here, and then C down here. So the generality here suggests that this market has completed the minimum downside movement, which is what we were suggesting in the last webinar. Keep in mind, it did not go exactly as I said it. I was expecting straight down movement. But yeah, these are markets. They don't always do exactly what you think they would do. Right. So now let's see what is happening here. So first of all, let me correct the counts over here, get rid of the stuff in the middle and this as well. Okay. So first of all, we can do is we can just measure the A leg down and then C leg. Generally, we should have an equality between these two legs. So if I measure using this fib tool, we found that it has not really touched the 100%, but it has gone lower than 61, as you can see over here. 61 has been crossed, but 100 has not been touched. Generally, 1:1 equality is what we look out for. So 1:1 is not touched. The target for that would come around 18,372, as you can see over here. Now let's look at some other things by going to a little bit lower time frame and see. So it could also be said that the C wave is continuing, in which case we will consider that this is a 1, 2, 3, and this is a possible 4, forming a possible triangle, and then there will be a leg down for C. Right. So we do not have a confirmation, basically, so to speak, for the wave C's completion at this point in time. It would be a wait and watch for me, right? And there is one other thing. When on 8 December, the news events were happening on Thursday, the whole market in Bank Nifty, which is the index of the banking stocks, moved up, but Nifty held on. It was not able to breach the important levels at all, right? So something suggests to me that the whole manipulation in Bank Nifty caused this whole hold up, right? And it is possible that the down move is a little bit more than what it looks like. So in my understanding, the market can go a little bit more lower, and we don't have any confirmation for upside. So I will not advise any trade on Nifty counter at this point in time, right? And we will just wait and watch. Our downside targets are already achieved. The only thing which will give us some sort of confirmation for upside will be the taking out of the wave B high 18660 level, which is quite above the current price level anyways. So wait and watch on Nifty. Keep in mind the news drama may have left some more downside moment to be experienced by this market and yet to be seen. That's about it for Nifty. If you guys have any doubt, you can just type in the comment section. I'll wait for a few seconds before we move to Bitcoin, which will be the last chart of our discussions. Freddy, Farid, Mukonova Suka, hi there. Sorry, I did not check your message back. So are you guys following me? Are you understanding what I'm saying? Thank you, Mark, for the confirmation. Darwals, what about you? Noise. Okay. Well, in that case, let's move ahead with the next and the last chart, Bitcoin. Generally, there is never any update on Bitcoin. We are almost always discussing the longer time frame views, which is suggestive of the fact that basically on Bitcoin, the drama is that from this point, we have a wave A up, a wave B down, wave C up. This is the only bullish count I have for Bitcoin. Other counts are real super duper bearish, right? So unless something changes, we will just discuss the bullish count. Everybody knows the bearish counts are just strong down. Now, the interesting thing in this count, which I have, is, as I have pointed out in so many webinars, because as I said, there is nothing really to update here. At this level of 15,300 to 14,700 something ish, this zone basically, where you can see these purple lines, is a high confluence target zone. What basically that means is we expect that the wave B is going to possibly complete within this zone if this count is correct. The market has not yet entered within the zone, right? We are still waiting for the market to form a confirmation like a reversal over here and then take out the last high, recent high of 21,121. If it does both of these things, it should look something like this. Once it does something like this, then around 21,500 levels, we can 20,400 something levels, sorry, this high basically. At that point, we can then look to enter longs on this counter with the targets of 30,000 or higher, right? So that's our whole analysis of BTC. It's still wait and watch, still the same reversal regions. And yes, I can do some short-term analysis over here, but it will be too short-term. I don't know if people are even interested in this counter anyways. Most people here are just investors in BTC. So that's my quick take on BTC. We are expecting a flat correction. This one is what you will particularly call a running flat. I have discussed this, by the way, in another chart of the currency pairs we were discussing, or it was crude oil, something like that. This pattern I have discussed running flat in this particular webinar back in one or two charts. So that's about it for my discussions on BTC. If you have any doubts, I'll just wait for you to type it in the comment section. And if not, then it was nice to see you guys joined in. So many of you have joined in. And again, those of you joined in late, you can see my outstanding track record of 50% plus accuracy. Going to 50s.com/forecast accuracy, where I have 6 years of unmatched industry leading accuracy of 80% plus. 2017, 18, 19, 20, and 2021 and 2022 still to be published, right? If you are interested in learning, I have courses, the video course, the personal classes, and I have a book, Think with the Markets. You can get that on Amazon Kindle. So all that what do you call digital assets I have, if you are interested in learning. And of course, webinars. These public webinars are free and you should totally join them, because I discuss live trade setups in them all the time. If you had joined the last webinar, we discussed 2 trades. Both of them followed the directions right after that told them or executed them. That was it, guys. Hit the likes, share the content with 3 of your social media. That's my request. If you like the content, definitely do that. Helps us increase the reach. And join me next week, Monday, Wednesday, Friday. Okay, 2 p.m. GMT. I will post the timestamps for this content after this webinar a few minutes afterwards. So basically, it takes a lot of time doing this webinar, doing the analysis, and then posting timestamps, etc. So your shares and love and like is all very much welcome. That's it. Talk to you guys in the next one. Thank you, Mark. Thank you, Farid. TradingView or YouTube on next session. Farid, I will suggest you just join TradingView, because what I've seen is that sometimes the YouTube feed will keep reloading. I've seen that error, and also the processing time YouTube takes once the webinar is complete is very high. After the webinar is complete, even if you click the video on YouTube, it takes a lot of time to show the content. So I will suggest you join on TradingView. If there is any more comments, let me just quickly check. What take for me at the moment? I don't understand what you mean by MAOTIC. Farid Singh, thank you. It was a great session. Thank you, Farid. Everybody is waiting for bull movements. Yes, that seems to be the case. Okay. Thank you, Mukono Watsuka, for joining in, Freddy, and everybody else. That would be it for now. Bye, guys. See you next time.